Okay, looks like we are up. See if anybody says anything in the chat there about the stream, but it looks pretty good to me. Yeah, welcome back for part 2 of the OpEI's DeFi workshop. Tonight we'll be covering a little bit more on the use cases, and Chill has some interesting updates for those of you interested in the stable coins. Just a good breakdown on the kind of couple of the different stable coins algorithmically and how they work. And then we're going to finish it up with some actual how-to instructions on Uniswap or MetaMask first, and then Uniswap and Compound, Synthetics, Hedgic. I think that's it. Yeah, it's should be good. And this is not, we're not going to cover every single thing you can do on all of these platforms, or we'd be here for another 4 hours. But it'll just be kind of how to use the main, the primary services on each one of those protocols. I am Matt Millen with the Open Economy Initiative. I'm joined tonight by my co-founder, Chilla Brimer. She's just going to hold off on the video for now. I'm not sure. I think just some technical difficulties there, but she's definitely joining us. We'll be presenting here shortly. And yeah, for all of you who maybe didn't catch last week's stream, part 1 on the DeFi workshop, we went through a bunch of the use cases. It was pretty good information, kind of like a higher level overview of the decentralized finance ecosystem. And then this week, we'll be just finishing up some of those use cases we didn't get to, and then, the how-to. So yeah, with that, we're just going to really jump into it. It's probably going to be about 2 hours tonight because we want to make sure and leave time for all your questions. So don't hesitate to pop some questions in the chat there if you're curious about something, and we may not answer them immediately, but we will eventually try and get to all of them when it makes sense to take a little pause and take some questions from the chat. So with that, I am going to share my screen, and we're just gonna get into it. All right. So if you remember from last week, we talked about lending, the different lending platforms, the different decentralized exchanges. Chill told us about stablecoins, and that's kind of where we ended up ending the evening. So we still have to cover assets and payments. And so on the asset side of things, this is really the broadest category in this list of use cases, just because this is encompassing things like synthetic assets, which the Synthetics protocol offers, and then derivatives and options and other things like that, which is what Hedgic covers. And then the actual digital assets like your cryptocurrencies. So it's a pretty broad swath of the DeFi ecosystem can kind of be wrapped up under that label of assets. But these are the two that I want to talk about tonight: Synthetics and Hedgic. We'll start with Synthetics, and they are definitely the biggest platform for synthetic assets, hence the name Synthetics, right? Formerly, they were Haven, Havven, but they allowed you to trade against stocks, gold, and cryptocurrencies, so you can get some exposure to things outside of the crypto world within the crypto DeFi space, which is pretty cool. It's important to note, though, that these are like mirrored markets. They're synthetic markets, so you're not actually trading, gold, which would be kind of hard to trade that digitally. But you're trading a token underneath the Synthetics protocol that is pegged to the current price of gold. So whatever the price of gold is, they have an oracle that's feeding them that price, and then you can trade it with synthetic USD, synthetic Ethereum, whatever pairing that you choose to trade that on. And the same applies to all the other assets on their platform. So still a cool way to get exposure to things outside of the crypto world, though. And second, we've got Hedgic. And this is a decentralized platform for trading crypto options. And yeah, they offer some great options to allow you to mitigate the risks on your trade. And primarily the way I've seen this used is just hedging your risk. So if you think that Ethereum is going to increase in price, which today I think it definitely has. I haven't checked it in the last couple hours, but both Bitcoin and kind of the whole crypto space in general has really been running up today, which is fun to see. But yeah, so let's say you make a big purchase of Ethereum, thinking that the price is going to appreciate, but you do your charting and you realize, well, there's actually a chance we might correct downwards. So I don't want to be exposed to all of that risk if the price really falls. So I can go over to Hedgic and I can purchase a put. And so what that allows me to do is if the price really, really falls, even though I'm hoping that it goes up, if it doesn't and it comes down, I've got that put on there, and I have my strike price, which is usually the current price that I purchase it at, and then I pick a time period anywhere from a day to 4 weeks, and within that time period, if the price really, really comes down, that put that I've purchased will be in the money, and I can take a little bit of profit on that, or if I've purchased quite a few puts, I can take a lot of profit on that, and that will kind of offset some of the devaluation that my large Ethereum purchase is seeing. And the flip side of that is if you've got a short position on Ethereum, you could purchase a call, and then if the price drop or goes up when you're hoping that it would go down, that call would then also be in the money. You could take a little bit of profit on that, and so you're not seeing that full loss if the market kind of moves against how you thought. So yeah, so that's Synthetics and Hedgic. That's pretty cool. We'll go into the how-to, and I'll talk a little bit more about them later in the evening and take your questions. But yeah, for now, that's just kind of a higher level overview of them. And yeah, that'll do it for assets. The next one here we have is payments. And for the payment space in the United States, there's still kind of a long way to go for the US consumers. Chill was telling me that paper checks are like in museums over in Europe and other parts of like the first world. And, China's really big on their mobile payment apps, and they really just aren't used that widely here in the States. But I feel like that's changing, and definitely companies like Flexa and some of these other decentralized payment networks are working to make that the case. And the cool thing with Flexa is that you're able to pay in crypto, and you can use a USD pegged stablecoin if you prefer, but it's really simple, and it's just done using a QR code scanner. And with this system, there's no way for any fraud or chargebacks to occur, because the settlement is being finalized through a decentralized network, and it's pretty close to being instant. So what the merchant gets is they get the impossibility of fraud occurring. So if that someone pays through Flexa, it's guaranteed, and then it settles, and so it's almost instantly in their account. And then the fees as well are much lower than what the credit card companies are charging. Those fees can get pretty ridiculous if you own your own business, or are in a position where you're taking credit card payments from someone. You'll realize pretty quick that these companies are making quite a bit off of you. So with Flexa, the fees are much lower, the settlement's pretty instant, and there's really no chance for fraud or chargebacks because they're doing everything through this decentralized blockchain network. And yeah, it's pretty cool. Second one here is the Lightning Network. This is a bit of a different beast for sure, and if you've heard about it prior to me mentioning it here, it's probably to do with Bitcoin, and that's the biggest place that's being used is on the Bitcoin network, and addressing things like the transaction per second scaling and lowering the fees that you have to pay to send Bitcoin back and forth to different addresses. But technically it is still a payment service. It's just kind of a Bitcoin at this point, just a Bitcoin only payment service. And the way that it works is it has a two-way channel where you've got you can have a ton of payments kind of go back and forth between the two people on either end of the channel, or the two entities on either end of the channel. And the important distinction here is that these payments are not being mined into a Bitcoin block, because that incurs a transaction fee. That would be very, very expensive. So you have these kind of side chain payment channels where all of these transactions are going back and forth. And then when it comes time to close that payment channel out, it's just a ledger, very similar to how the Bitcoin blockchain keeps track of everything. Everything is settled up, and then that final amount, whoever's owed a little bit more at the end of all those payments taking place, that is what's written to the Bitcoin blockchain, and that's what incurs the transaction fee. So you do a lot of the transactions off the chain, and then you just settle the final state to the chain, and you can do way, way more transactions than you would be able to if every single one of them was mined into the full blockchain. So yeah, there are some criticisms to it. Like the backing up of the transactions and things like that can kind of cause you to potentially lose the money that you've put into it. But it's getting better every day, and it's definitely growing. And I think I read something today that the Kraken exchange, which is a pretty big exchange here, is going to be implementing it sometime in the first half of 2021. They're going to have the Lightning Network up and running on the Kraken exchange. So it's definitely coming, and worth noting as a payment decentralized payment network here. So yeah, that's going to actually do it for the use cases tonight. So with that, I'm going to turn it over to Chill, and she's going to tell us about the algorithmic stablecoins and give us an update there. And then once she's done with that, we'll actually get into the how-to, and I'll show y'all how to use some of these different DeFi protocols that we've been talking about. So I'm going to stop my share. I forgot to turn my video off, but it's probably all right. All right, Chill, take it away.
Okay. Hey guys. So last week we covered the CBDCs and some of the stable coins. And if you just to refresh your memory, there were 3 different types of stable coins: fiat-backed, crypto-backed, and algorithmic. And I mentioned that the algorithmic is the most interesting. It is such a huge topic, so I'm not going to cover all the algorithmic stable coins because we would be here all night. I'm just going to cover 2 of the main ones. So like we mentioned before, obviously cryptocurrencies are a major upgrade to the effectiveness of money and the monetary policy worldwide. Instantly, anyone can send money anywhere. It cannot be devalued or diluted by irresponsible governments, and we can program it to operate inside financial contracts that rely on code, not just the law. So the cryptocurrencies obviously have a major problem, that is volatility, and stable coins are trying to solve this, by providing a stable store of value and a standard deferred payment method. Now we have a couple of challenges, and one of the challenges being achieving the stability in the cryptocurrencies without actually compromising other important aspects and properties. So you may wonder, how could we create a stable coin independently that isn't pegged to anything? And there are a number of problems here that stand in the way. So when central banks stabilize a currency, what they actually do is they measure, let's say, the purchasing power of the US dollar. They predict or forecast, the USD demand in future, and then they manipulate the currency supply, even when they don't actually have the capital to purchase the USD from the open market. So perhaps in the future, what we're seeing is that there may be a DAO, decentralized autonomous organization-based legal system in cryptocurrencies that is relatively stable, and it can stabilize the demand for, let's say, long-standing cryptocurrencies such as Ethereum or Bitcoin. And this may permit, the true replication of the central banking on the blockchain. But for now, this is a huge goal. So right now we are pegging one currency to another, and it's much simpler for crypto issuers, obviously. So the two main cryptocurrencies that I'm going to cover is reserve and carbon. Reserve has this goal of effective altruism. By that they mean basically creating direct impact on the market, but also making money to give back to projects. You can see that around the world, you see the inflation rate is pretty high, so stablecoins could obviously be used as their stable currencies in those markets. So there's a couple of terms that we have to discuss. Pegged versus floating exchange. So pegged, as I explained, it's pegged to another currency. Floating exchange rate is obtained by a specific algorithmic design. And one of the terms that I need to explain to you guys is what is self-referential versus foreign collateral. So in order to peg a currency to an asset, okay, or an asset basket, one needs to be able to hold that currency a fixed price. So for example, let's say you want to peg a token 1-to-1 to the euro, and you would need to be able to offer the holders either €1 worth of value or €1 worth of some other asset. So let's say gold. You could hold a bunch of gold in a safe, and so as long as you're willing to offer €1 worth of gold per unit of currency, that would do just as good. But what happens if the price of gold suddenly goes down? You would now need to offer a bunch more gold for the token, and this would obviously impact your ability to have 100% collateralized stablecoin. So the more volatile the asset or the asset basket that you choose, the higher the risk you run to not be able to basically run out of your collateral at some point down the market. So one interesting approach that stablecoins came up with, particularly Reserve, was to take a newly created self-referential asset to back the new currency. So this is basically a crypto that's backing a crypto with the collateral. So for example, the collateral holders, they receive a share of the transaction fees or the newly minted stable coins in the expansionary period. And this benefits because the crypto is being adopted and the collateral holders are basically profiting from it. So this may confuse you now, but I'm going to explain it. So the Reserve protocol interacts with three kinds of tokens, okay? So as you can see, there's a Reserve token, which is the actual token that you can, hold or spend the way you spend US dollars. Then there is the Reserve rights token, which is a crypto that's used to facilitate the stability of the Reserve token. And then you have collateral tokens, which is an asset held in the smart contracts to back the value of the first Reserve token. So it's much like the gold used to back the value of the US dollar, the same way these are used. And there are many collateral tokens real world. So they basically tokenize real world assets, commodities, currencies, and securities. Okay, so now you may wonder, okay, Chill, but how is the reserve token stabilized? So what happens is when the demand goes down of the reserve token, so let's say the reserve token is $1, and all of a sudden the demand goes down, so now the price on the exchange is 98 cents. So people will now be incentivized to purchase the collateral and redeem it for $1. So they do this, they start buying it, and they continue to buy it on the open markets until there's no more money to be made, which is exactly when the market price matches the redemption price, which is $1. The same mechanism, obviously, if the exchange, the reserve token price goes up to, like, say, $1.02, people will be incentivized to now purchase the newly minted reserve tokens for $1 because they can make 2 cents on each, or the reserve right tokens, and immediately they're going to sell it on the open market for $1.02. So they continue to sell it until this drives the price down. So this is very similar to what central banks are doing when they just printing money or manipulating M1, M2. So another issue that stablecoins must solve is preventing speculative attacks and bank runs. So in theory, there's a possibility that the reserve token remains less than one-on-one collateralized if the collateral tokens, for whatever reason, depreciate, or there's just simply no demand for the reserve right tokens. So in this case, the reserve protocol came up with this idea to widen the price band. So this means that the reserve tokens would temporarily be redeemable for 95 cents, but when you try to buy it, it would cost you $1.05. So this, by expanding basically the band, you eliminate the possibility of bank run, because why would you buy it for $1.05 and then sell it for less? So it's kind of to discourage redemption, basically. So this is how the reserve token, the reserve stablecoin works. Now we're going to move on to the second stablecoin that I'm going to cover. Is Carbon. So Carbon is powered by Hedera Hashgraph technology, and it essentially has an elastic supply policy that adjusts the quantity of the supply coins in response to the market demand. So their ultimate goal is obviously to keep the value of each Carbon token locked to the value of the USD around $1. So how do they achieve this? Well, there's several different ways. So one that's unique to Carbon is they have they're measuring the exchange rate. So Carbon uses something called Decentralized shelling point scheme. So to achieve this, basically, every 24 hours, also known as a rebasement period, so every 24 hours, the shelling point scheme is initiated, which means that the nodes will submit the bids for what they believe to be the true exchange rate. And each bid is calculated by the collateral dominated in Carbon. So the votes are just counted up every 24 hours, and they determine the optimal exchange rate for Carbon. Carbon uses something unique called the Aztec model. So what is the Aztec model? So they have something called carbon credit. So carbon credit is basically another digital currency similar to what Reserve did. So it's a carbon stable coin, and then there's carbon credit. And the carbon credit is a volatile coin that will be used to absorb the demand and the price shock of the carbon stablecoin. So the contraction period is when the coins are trading for less than $1. So if you see carbon on the exchange, it's less than $1, then Carbon will auction these carbon credits via a reverse Dutch auction. So this will incentivize you as a user to burn your stable coins, and it will create an upward price pressure, causing the price to appreciate back to $1. Now, if there's an expansion, meaning the coins are trading for more than $1, then the coins will be distributed to carbon credit holders pro rata, and this is creating a downward pressure, bringing the price of the stable coins down to $1. So very, very similar, like the current central banking system, flooding the market with new USD. The entire system is powered by Hedera Hashgraph. So it's basically a blockchain alternative that achieves hundreds of thousands of transactions per second, in addition to the Byzantine fault tolerance. So, and in the end, basically, this stable coin is capable of handling 100 plus 100,000 transactions per second and still maintaining a stable exchange rate around $1 USD. So these are the two main. Obviously, I mean, I could be here talking about it all night because both of these are, such large topics. But I'm just gonna hand it over to Matt so he can continue.
Cool. All right. Thanks, Chill. And if you guys have any questions about this, pop them into the chat, and Chill will be taking the chat over and happy to answer anything there. Or if it's a bit more of a complex answer, we can just get around here to answer it live. So yeah, don't be shy about asking questions in the chat. That's why we're doing this live instead of just recorded. But yeah, so the next portion of the stream is going to be the actual how-to. And the first thing we're going to start off with is how to install MetaMask and make sure you're getting the correct version of MetaMask. If you saw I think there's the guy from Nexus Mutual who I think he had like 8.5 million. He's the founder of Nexus Mutual. It's like a decentralized finance smart contract insurance protocol. He installed an incorrect version of MetaMask, and he literally lost like $8.5 million worth of the token. So yeah, definitely important to make sure you're getting the right version. And this MetaMask wallet's going to be kind of the core of everything you're doing in the DeFi space, at least when it comes to Ethereum. So with that, I will share this little video that I recorded yesterday. And again, let us know if you have any questions, and we'll take it from there. All right, welcome to the how-to portion of the DeFi tutorial, or workshop rather. My name is Matt, which you probably already know, but just in case. And today we're going to be doing, well, this portion at least is going to be the how to install the MetaMask browser extension onto your internet browser. So I've got a fresh install of the Brave web browser. It's based on Chrome, so you can use any Chrome extensions on it. And there is actually a token called BAT that is install the MetaMask browser and you can earn rewards for viewing ads within the browser, and it's a very privacy-centric browser, so it tries to limit the amount of tracking that happens to you as you browse your favorite websites. So kind of cool. Check them out. Full disclaimer: I do own a little bit of BAT, but yeah, I use this on my phone and on my desktop, and so far I've enjoyed their service or product. So but yeah, so let's install MetaMask here and set it up. The first thing, so we want to make sure we're getting the correct version of MetaMask. There's been some scams going around lately where people are installing the wrong version of MetaMask unknowingly, and then you transfer your crypto into it to go do something, whatever you want to do, and all of a sudden it's gone, and that's never a good feeling. So to avoid that, we're going to just go and we're going to search for MetaMask GitHub, and we see here our first result is MetaMask on GitHub, github.com. That URL looks correct, so we will see where this takes us, and it takes us to the profile for MetaMask directly on GitHub. We can see that it's been verified by GitHub, which is good. They're not going to generally allow any scammy projects to get that verified check mark, and I can see that I am at github.com. And right here is a nice little link to take me directly to MetaMask's website. I click on that, and I will want to download, and this is metamask.io. Probably not a bad idea to bookmark that if you plan on installing this repeatedly, or just to have it in there. Never a bad idea. And I'm technically on Chrome, even though I'm on the Brave browser. You can see here supported browsers: Chrome, Firefox, Brave, and Edge. And it just takes me to the Chrome web store. So it's a Chromium-based browser. But yeah, so here's MetaMask. I've gone through verified link from GitHub to their website, and then from their website to the Chrome web store. So I will now add this to Brave, and yep, I want to add MetaMask. Yeah, I'm okay with all that. And let it think for a little bit, and then boom, it's in there. So it opened it up in a new tab there. If I want to see it, I can just hit this little pin button here, and then it'll come up. Or it's got it open in its own tab now, which is, in my opinion, a little bit easier to use it, but you can get to it right there. So we will want to get started. And if you've already got a seed phrase, you can enter that in, but since I'm just doing this for demo purpose, I'm going to go ahead and just create a new wallet, and it'll give me my own seed phrase. And they want a little bit of data, and that's fine with me. They anonymize it, so I will support their developers, make it a little easier on them. And first thing we do is choose a very strong password, minimum of 8 characters, 13's good. Use uppercase letters, lowercase letters, numbers, and symbols. So I'll do that real quick. Okay, and like everybody else, I don't actually read the terms of use, so I just assume they're not going to screw me, since lots of other people seem to trust them. And now we've got my secret backup phrase. I'm not going to reveal it for obvious reasons here, because I'm going to have some Ethereum in this account, but what you'll want to do at home is click on this, reveal it. There'll be 12 words there. You're going to want to write them down in order. Write them to a piece of paper and store them in a secure location. And yeah, if you want even more security, write it down on multiple pieces of paper and store them in 2 to 3 different physical locations. Memorizing the phrase is alright, but if you have a lot of value on there and you get in a motorcycle accident or something like that, you may not be able to recall it, and all those funds are just locked in there while you're a vegetable. So yeah, just write it down on a piece of paper. So I'm going to click Remind Me Later here, but it'll go through a little procedure that just confirms that you've correctly done it. So yep, token swapping is here. That's great, and I'm not going to do any swaps right now, but boom, I'm in. This is my deposit address right here. If I click on it, I copy it to my keyboard. I can see up here in the corner, this is account number 1. If I want to, I can rename it here. Let's see here. How do you rename the account? Oh, I have no idea. Thought it was a little thing up there, but alright. Anyway. Okay, so that is basically how to set it up. It's a little bit of an abrupt ending there. But that's how to set up MetaMask. And there's a couple questions in the chat here. And what I just want to take a second here and answer them. So it looks like Candace was asking, once you've downloaded it, is there a way to tell if you've got the right version? Unfortunately, there's not a great method that I know of to do that. The best thing would be to make sure you've backed it up. And go to that, go to the backup tab there where it shows your 12 words. And then once you've written down those 12 words, just uninstall the browser extension and then reinstall it. And then where it says, it gives you the option to create a new account or to import a wallet. You'll want to do import a wallet at that point. And then you can put those 12 words back in and you'll have everything should be as it was before, and you'll be comfortable and know that you're on the right version there. Yeah, Paul. Yeah, that's a good point there, Paul. If you don't have those 12 words, it's gone. So if you're going to uninstall it, make sure you write down those 12 words. Yeah, and so Jim, regarding the hedging options, so it's all the counterparty risk. You have to deposit an asset on there to provide liquidity. So there's two things that you can do with hedging. You can purchase your calls and your puts, how you kind of normally would with options, but then you can also provide liquidity to the protocol, and you basically give hedging the option to lock up some of your assets, whether it's Ethereum or wrapped Bitcoin or whatever. And then they have those funds, and then the code in the smart contract is what guarantees that it will be paid out. So there's a pool of funds that's basically locked into the smart contract, and then when you are in profit, that's who's paying you the additional amount to what you put in for whatever option you've purchased. And it's all managed through the smart contract, and the code has been audited and people have been using it, so they're reasonably confident that they're going to get paid out. The code is structured in such a way that if you are in profit and you go to execute that contract, take your profit, that you will be paid out. And then the game becomes for the liquidity providers is like, all right, so everybody's going long, and so I'm going to fund some of the shorts and hope that it comes down. You can make a lot of money, but if the market kind of goes against what you're predicting, then the liquidity you're providing is going to be used to pay people out. So it's kind of two different games taking place simultaneously, which is sort of interesting. And yep. So with that, I'm going to get to the next video that we've got here. And this is actually trading on Uniswap. All right, so we showed you how to get into MetaMask and set that up. I've funded my MetaMask wallet with a little bit of Ethereum, and so now I'm ready to go over to Uniswap and either execute a trade or provide a little bit of liquidity. Really up to me. But to provide liquidity, I need to deposit both sides of the pool. So I would need to deposit some Ethereum and also some of whatever token that I'm contributing liquidity for. So before I do any of that, though, I need to come over here and connect to my MetaMask wallet that we previously set up. Obviously, you get a few different options here. I've only messed with the Coinbase wallet and with MetaMask. So actually, I usually use my Ledger hardware wallet, import that into MetaMask, and then use that with MetaMask. So my funds are still on my hardware wallet, which is a fun way to do it. A couple extra steps, but makes me feel like I'm being pretty secure. But Today we're just going to be using the MetaMask account that I set up previously. Got a little bit of Ethereum in there. It's the OpEI account. Yep, that's right. And yeah, we're going to connect to that. That looks like the right address. And there we go. And we can see it here. Got the first 6 characters and the last 4 on my wallet, and my little Ethereum balance here. Everything so far looks good. Now what I want to do is decide which pairing I would like to provide some liquidity for, and then once I decide that, I can come in here and swap some of my ETH for that token, and then go ahead and deposit it as liquidity. Okay, so before I make a trade, I'm going to go over here to the charts and see what liquidity pools are available and which ones are providing, or I guess what types of returns are being provided. And actually, I need to go to pairs here, and I can see here. Okay, here's the pair. So wrap Bitcoin to Ethereum. $145 million worth of liquidity, about $15 million of trading volume this last 24 hours, roughly 60 in the last week, 46.5 grand in fees has been paid out in the last hour. And so, to calculate what percentage of that fees I get, I would need to determine what amount of liquidity I'm providing, divide that by this total amount, and that would give me my percentage of the total liquidity pool, and then I would have that percentage and then just multiply it by these fees, and I'd see roughly what I'm going to be making in 24 hours with my liquidity being provided to this pair specifically. And they've kind of already done that for you here, where this is based on the 24 volume taken out to 1 year time frame. So over a year, for every dollar of liquidity you provide, you're going to be making 11.69% on that annually, if the volume and the liquidity would stay the same over that 1 year period, which it is absolutely not going to do. But for some of the more with the more liquidity in there, the more stable it is, the more likely it is to get some return around that. Whereas, if the liquidity is very, very low, sometimes you get these crazy return percentages. See if I can find one here. I was looking earlier, it's like 100% return on your money, maybe on page 2. Let's see here. Okay, yeah, so Pol's ETH is almost 95% on the money that you would deposit. So you deposit $1, and a year later, you would have $1 plus 95 cents, almost $2, which is a pretty high return on your investment. But you can see there's only $3 million, and I think wrapped Bitcoin and Ethereum was about $145 million. So much smaller percentage, or much smaller liquidity pool, and obviously smaller volume, and a smaller amount of fees to go around. But you're seeing a nice fat return on the liquidity that you're providing to this pairing. So okay, let's say interesting. I'm not sure what Pols is. It looks like the polka dot logo, which I'm familiar with. So let's maybe do a little bit of digging and see what this looks like. So okay, Pols ETH pair. Okay, I want to know what Pols is though. Token safety alert. Anyone can create and name any ERC20 token on Ethereum, including creating fake versions of existing tokens and claiming to represent projects that do not have a token. Similar to Etherscan, this site automatically tracks analytics for all the ERC20 tokens independent of token integrity. So that's important. Just because you see it on here does not mean it's been verified. Anybody can put a scam token up, and if enough people kind of buy into it, it could appear on this list, and you could be purchasing something that's essentially worthless, or just gonna dump in price and be worth nothing shortly after you purchase it. So I understand that. That is one of the risks of using these decentralized exchanges. It's up to you to do your own research. And so with that in mind, this is the token address for this polls token, Pokestarter token. Let's see where this goes. All right, so this takes us over to Etherscan, which is the blockchain explorer for Ethereum. I can see here is the contract address. I can see over here there's the token tracker, and view the token tracker page. All right, I'll check that out. And okay, so there is 100 million polls tokens. Looks like there's the contract address that I saw earlier. There's a bunch of transfers. About almost 14,000 people hold it, or 14,000 different addresses. It could be one person with 14,000 different addresses, which would mean only one person's holding it, but I doubt that's the case. Okay, here's their official site. Let's check that out. Pokestarter, decentralize the way your ideas raise capital. Be the first to join Pokestarter, a DEX built for cross-chain token pools and auctions, enabling projects to raise capital on a decentralized, permissionless, and interoperable environment based on Polkadot. Okay, so this does have something to do with Polkadot. Interesting. So it's a decentralized exchange built on Polkadot, and you can raise capital, and I guess it's built to be cross-chain or work across networks, different blockchain networks. All right, that sounds kind of cool, I guess. A lot of buzzwords in there that would probably mean not other people are willing to get behind this thing. Let's scroll down here. Let's see. What do they have at the bottom? Okay, here's the About Us. And, all right, they've been on these things potentially. There's not really any proof that they've been on there. Launch interoperable token pools. Okay, cool, whatever. Where is the team? That's what I'm interested in. Market growth, yeah. Ah, okay. Here's their founders and advisors. CEO, co-founder. All right, let's see what his Twitter looks like. Daniel Stockhouse. All right, 5,600 followers from London. Pokestarter.com. That's where we just came from. And here's a tweet from him on the 12th, so a few days ago. So it looks like he's been active. He's got quite a few followers. And here's the official Twitter for this. Oh wow, 14.3 thousand followers. So this, this feels legit. Obviously, it could all be a scam. But they have an about page. It looks like a real person is the co-founder. They have a Twitter presence. There's not a bunch of people dragging them on Twitter that I can see so far. Doesn't look like people are angry about them or accusing them of being a scam. I get the feeling that they might be legitimate. So, I'm not putting a ton of money into this, and I'm comfortable enough that I don't think this is a scam project. But, what I've done is literally the bare minimum that you should do. And honestly, if I was really looking to significantly get into this and make it a long-term, provide liquidity here long-term, I would do a much deeper dive into this, because it's all, the responsibility is on you. The self-custody is you, and so you need to do your own research. But that was just a really very quick and dirty vet. That's enough for me to throw, $10 worth of Ethereum at this and feel reasonably confident it's not going to instantly be worthless. So yeah, let's come back. We'll close out of these. Come back to Uniswap. And so I want to provide $10 of liquidity. So I'm going to buy $5 worth of Ethereum and $5 worth, or I already have the Ethereum, so I'm going to buy $5 worth of this polls token. So we'll come in here, search for this, and unfortunately it doesn't look like it's showing up in their list. So I'm going to have to add a custom token. So we'll go back to the charts here, and I had the contract address open earlier, and I unfortunately did not save it. So in the overview here, there's polls, Pokestarter token, POLS. Oh, where'd it go? I just had it. Here it is. All right, here's the contract address. It's like the same one that I was just on. Yep, okay. So I'm going to copy this contract address. And you could alternatively, get it from the page here. Here's the contract address. So you want to copy that, come back to Uniswap, and just paste the address in right there. Should come up. There's polls. I'm going to add it. Now I should be able to select this token when I search in this one. There we go. It tells me it's been added by the user. Looks good to me. And what is $5 of Ethereum right now? I think it's probably 0.009. Roughly. All right. That sounds like it. 12 polls, 0.009. I think that's just a little bit over $5 worth of Ethereum at this point. So, okay, this looks good. Looks like I'm going to get 12.02 polls for this. If I wanted to be, safe, I would go onto CoinMarketCap or some other website, look up the current price of polls, times that by 12.02. Make sure that corresponds to 0.009 times the current price of Ethereum, just to make sure this isn't some wacky token I've accidentally added and I'm overpaying for it and just getting the wrong thing, because that is possible. But it looks all right. Price impact is going to be less than 0.01%, so I don't need to worry about changing my slippage up here. I'm under 0.1%, so I'm good there. It's not going to be too much slippage, and this is going to be paid to the liquidity provider. That'll be the fee paid to them, which once I provide this liquidity, I'll be getting a little share of that, which is kind of cool. But yeah, everything looks good, so let's go ahead and swap this. And then this is the final confirmation page. Just kind of gives me everything I was already shown in the last one, and then it gives me this nice little number here, which is the current exchange rate. So 1 Ethereum is currently worth 1,336.01 polls. Alright, that all looks good. Let's confirm this swap. Now my MetaMask will pop up, and it looks like my account may have gotten disconnected, so we'll reconnect it. And yep, about $5.80. Gas fee is going to be $10.34. Oh my gosh, that is ridiculous. So this $5 transaction, or this swap, is going to cost me $10 in gas, which is a little bit ridiculous. But for the educational purposes that we want to do here, I'll go ahead and just confirm that and cry quietly. Although, is it really that crazy? Estimated price, yeah, it is. Holy smokes. Why is that? Because I made a custom amount in here earlier, so I'm hoping it's lower. Actually, you know what? It's a great time, before we pay this, to go take a look and see what the current kind of the going rate for gas is, and make sure we're not overpaying. Yeah, it looks like 91 GUI for Ethereum transactions, and since we're trading some ERC20s, we've got to we're going to pay quite a bit more than if we were just transferring straight Ethereum. But yeah, it looks like the price is about 91 GUI. If I come back here, take a look at this. Yeah, they set it at 96, so it's a little bit over the fast there that's showing on Etherscan, but not by too much. So yeah, I guess I'll go ahead and pay that. That makes me cry a little bit, but this is for the education. All right, my transaction has been submitted. And we can see up here, it's pending. And once this gets mined into an Ethereum block, this will switch, and I will then have some polls in my wallet, and I can go ahead and provide some liquidity on Uniswap. Alright, and it just went through. I get the little check mark here. If I want to, I can view it on Etherscan. Here's my transaction. So it looks like use Uniswap version 2, and I swapped some Ether into wrapped Ether, and then I swapped that Ether for 12 poles, and then the poles were returned to my original wallet. And I paid about $8 in a transaction fee to receive about $5.80 worth of polls. Yep. Okay, so that looks good, and I can see it. I got my polls there. All right. So let's provide some liquidity. Okay, so to provide some liquidity, I'm just going to go over here to the pool option. And it says liquidity providers earn a 0.3% fee, so 0.000003 fee on all trades, proportional to their share of the pool. Fees are added to the pool, accrue in real time, and can be claimed by withdrawing your liquidity. Read more about providing liquidity. That's a good option to take, because I believe they talk about the impermanent loss, or the what's it called, like the divergent loss that happens when a pair goes through a lot of volatility, because that can definitely offset some of your rewards for providing the liquidity. In some cases, it can actually be more than the fees that you're making, so you're losing money by providing liquidity. That's not always the case, obviously, or people wouldn't really do this, but just something to know about before you dump a lot of money into providing liquidity here. So currently there is no liquidity found. You can import a pool if I want, but I know that I haven't set anything up, so I'm going to click on add liquidity here, and I want to do polls. So I'll be adding polls, and I got to add a little bit of an equivalent amount of Ethereum to balance out the amount that I'm putting down here. So this is like $5.80 of polls. And this is about $5.80 of Ethereum. I'm going to have less than 0.01% share of the pool, because I'm providing $5, and I think it's like couple million bucks that's in the pool. But I'll still be eligible, I believe, to earn some of those liquidity provider fees. I'll just be getting a very, 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 very tiny amount of them. Okay, so we'll go ahead and approve this, and transaction fee is going to be $3.10, allowing Uniswap to spend your polls. Yeah, that's fine. They get permission function. Okay, there's the first one, and now it is pending. So what I was doing there is just approving Uniswap to kind of take custody of my polls. So we'll wait for this to be mined into a Ethereum block, and then we'll go and we'll actually supply the liquidity. Be nice if they did that like all in one transaction, save a bit on the gas fees, but it is what it is. I'm wondering, that was a fairly low amount to pay. I just paid $10 and then it set me up at 3. I'm wondering if I shouldn't have increased the amount that I was paying. Well, we will see. Alright, so I paused the video, but I've been waiting for, I don't know, maybe 5 minutes or so, and it still hasn't gone through. And I was wondering if maybe I didn't pay enough. I didn't set a high enough gas price, a GUI. But when I went back to Etherscan to see the gas tracker, and I hit refresh, it's just been climbing. It was up at 144. Now it's starting to come back down a little bit. But the transaction fees for Ethereum had just shot through the roof, which was kind of stalling that. So it's looking like it's coming back down now. So I might be all right to just leave it in there if I don't mind waiting a little bit. But I can come back here and see on my pending transaction, I'm sorry, actually in MetaMask, and come over here to activity, and if I hit speed up, I actually get an option here to up that price. And so I don't know if it tells me what I initially sent it at or set it at. My guess is it would be similar to what the first transaction was, which I think was like 90 something GUI. But if I wanted to, I could pump this up to, is it 144 earlier, and then if I wanted to, I could save that, and let's see here, actually, how did I speed that up? Just select fast or something like that, hit save. I don't know that that did anything. Oh, there it goes, went through. Did that actually? Oh yeah, okay, that did work. So I saved in a higher, the higher gas price there, and I guess when I hit save, transaction resubmitted, the gas fee of 0. Okay, yep. So when I hit speed up and then I saved in that faster one there, it did that faster price and basically instantly confirmed, but it cost me like an extra $1. So yeah, that was fun. But yeah, that's something during high volatility. I think right now the Bitcoin just popped over 21K and Ethereum is up over 600. So the markets are really moving. A lot of people are using the Ethereum network, which is driving those gas fees up. Okay, so I've approved my spending limit for the polls. So now I can actually supply this liquidity in here. And so I'm depositing this much ETH and then an equivalent amount of polls. My share of the pool is going to be 0.000354%, a very, very small amount, but you know what? For the training purposes here, we're just going to go ahead and do it. And I'll need to confirm that over here. And I don't think I want to pay 144 again. I guess it's at 110 right now. Let's come back over here and see. Hopefully this has come down to a more reasonable number. I guess, yeah, 126.96. What are they trying to tell me I need to do here? No, what doesn't tell me the GUI price on here, but fast 139. I don't think I want to do that. 99. Okay, yeah, we'll just go with average. So it's going to be about $18 worth. So the gas fee is $12, and then I'll be sending the polls tokens along with an equivalent amount of Ethereum. This is not reflecting the polls amount. This is only reflecting the Ethereum that I'll be providing to the pool plus the gas fee. But also, additionally, the polls will be subtracted from my wallet. So, all right, we can go ahead and confirm that. And the transaction has been submitted, and we'll just have to wait for that to confirm. And that's actually an error here where it says approve polls, because this one was dropped and it was replaced with the higher fee that I did through MetaMask. So this is just a little error here. I'm actually onto this one. So in case you're wondering, that's why it says 2 pending when technically there's just 1 pending, which is that add the ETH and the 12 polls. So we'll wait for that to confirm. And once it's confirmed, I am officially a liquidity provider for the Ethereum Pols pair on Uniswap, and I get my little percentage of the rewards that are paid out to the liquidity providers through Uniswap. Alright, and that transaction has confirmed. So I've added that, and here's my position, Pols Ethereum, and my pool share, the amount of Pols that I've provided, along with the corresponding amount of Ethereum. And if I come over here to pools, I can see that Pols Ethereum is under one of the pairings, and if I want to manage that, I can just click this little thing, and if I want to view all of my fees and some analytics, I can go here and I can add more liquidity, or I can remove it if for some reason I regretted my decision, or it's been a month or a week or something and I'm ready to take it out and earn my fees, because when you withdraw it and remove it all, you are able to you'll receive the additional amount of Pols as part of the fees that you've earned. So yep, that's it for Uniswap, and next up is Compound. Okay, so this is Matt here. I'm back live, not on the recording, but yeah, we had some good questions in the chat there. I think I got to all of them. But yeah, if you notice the gas fees, this was yesterday I was doing this. These gas fees were pretty incredible. Like I think it ended up being $30 total to just swap some Ethereum for Pols on Uniswap, and then provide the liquidity on there. And yeah, it's pretty crazy, and it's even crazier today. I think it's up at like 400 GUI or 500 GUI. So it's yeah, it's pretty high right now, but as we were saying in the chat, Ethereum 2.0 is going to bring some scaling in, and then Polkadot and some of these other blockchains that are providing interoperability are going to also hopefully help alleviate that. And there are other smart contract platforms out there. And actually, at the end of tonight, we'll talk a little bit about confidential DeFi and how that could also take some of the pressure off of Ethereum, because right now almost 90% of the DeFi space is run on Ethereum smart contracts. And so when the price goes up and everybody's sending things back and forth, the network just has trouble handling all of those transactions at the same time, which makes the fees go up. And that's where you end up paying 10, 20, 30, 40, 80, I think $90 this morning when I was looking at synthetics in gas fees. So it's like, it just prices out a lot of the smaller investors. You've got to have, thousands and thousands of dollars to really play during the high volatile markets like what we're seeing today. But in the future, that is expected to change and come down, and allow people with lower amounts that they'd like to invest to be able to profitably do so. So yeah, let's go on to the next video here. We're already an hour in, and we've still probably got another hour to go. So let's talk about Compound. Hey everybody. All right, we're back and show you how to use Compound. I've already connected my wallet, my MetaMask wallet up here, but if I hadn't, there'd be a little button that says connect wallet or no wallet, and then you just click on that, select your wallet, and it should link up there. If you're using MetaMask, it's pretty quick and easy. Yeah, once you've got your wallet connected to the Compound app, let's see, that's the website here, app.compound.finance. We can come down here and we can see there's supply markets and there's borrow markets. If I want to supply and earn a little bit of interest on what I'm supplying, that would come back to me at the time of withdrawal. I can pick any one of these assets and deposit directly into the Compound Finance smart contract. I have Ethereum currently in my wallet. So that would be the easiest for me. If I wanted to do DAI or something else like that, I would probably need to go over to Uniswap and actually trade that. And then when I have some DAI in my wallet, I'd come back here. I would need to first enable Compound to spend my DAI for me or have permission to use it. And then after I do that, and that incurs a transaction fee on the Ethereum network, I'd come in and I could actually create the transaction to supply it here. Once I've done that, if I wanted to borrow something on this side, and these are the interest rates for the borrowing, so you see if I wanted to borrow Compound, I'd be paying almost 10% annually to borrow that, whatever amount, 10% on whatever amount I borrow. But I would have to select, assuming I had had deposited some DAI, I'd say yes, I want to use DAI as collateral. That's another transaction here. You can see the transaction fees today are pretty wild. So I'm actually not going to be executing these just because there's a big run up in price today. But I would enable DAI as collateral, and then I'd come over here and I could borrow Compound or some other token, and then I would have to, I'd be responsible for paying that interest rate back when I go to close out my loan. So it's pretty simple. It's pretty straightforward. There's really not a whole lot to it. You just want to make sure that when you're going to do all this and set it all up, you kind of have a reason for doing it. You're not just willy-nilly doing it because you're going to get hit with those transaction fees. And hopefully with Ethereum 2.0 coming out and some other scaling solutions that are in the works, these transaction fees are going to be significantly dropping in the coming months to years. And regardless, once the volatility calms down a little bit, we shouldn't be seeing these crazy of. Yeah, so I'm going to pause it there because I literally just said the same thing here on the live stream. But yeah, I mean, this is just kind of a high level how to use Compound. Last week's presentation kind of dove into more about how, the liquidation ratios and kind of more the nuts and bolts of how Compound works. But actually using it is really simple. I mean, you've got your wallet connected. You come in here, you select which type of collateral you want to supply, and you can earn an interest rate on that. And if you want to borrow against it, borrow against the collateral you've deposited, you just tick the little collateral button, pay for that transaction, and then you're able to borrow whatever currency on the right that you'd like. And then you just have to make sure that your borrow limit and your borrow balance don't ever meet on this little dashboard thing up here. Because if they do, you'll start becoming liquidated and you're going to incur some penalties and fees like that. So always a good idea to maintain at least 200, 300% over collateralization. So for every dollar of value that you've deposited, you're only borrowing maybe 33 cents or at most 50 cents against that dollar that you've deposited. So yeah, let's see if there's any questions. Yeah, you've got C tokens, which are cheaper than interacting, but they're not one for one. They fluctuate in price, and that's something I wanted to include, but we're probably already going to run like 2 hours, and I still need to get to synthetics and to Hedgic. So I'm gonna start that video up here. But yeah, I mean, I'm really just kind of covering like the main things that these DeFi protocols can be used for. Like with synthetics, there's a bunch of different stuff that you can do on there, like minting and other things. But I'm just going to cover the trading of the synthetic assets tonight, just unfortunately because of time. But we'll take a look at doing a deeper dive, kind of like project specifics, after tonight. But yeah, we got a lot of ground to cover, so let's get to it. Okay, so this is the Synthetics Exchange, synthetic asset exchange, and I'm just going to do a quick how to make a trade on here if you wanted to get some exposure to things a little bit outside the cryptocurrency world. And this is something new that I have not explored, the options bit, so I'm not going to get into that. Actually, we're going to use Hedgic, the next how-to, to look at calls and puts and things. So, but yeah, this is something interesting. It might be worthwhile exploring if you're into that sort of options trading. But for now, we're just going to look at trading some synthetic assets on the Synthetics Exchange. So yeah, the first thing you're going to want to do is connect your MetaMask wallet, as per usual for almost all these DeFi services, and we can see there, okay, it looked like it connected. We should be ready to go. So, what exactly can I trade on here? If I want to look at the different pairings, I can go to the Markets tab, and it shows me the different pairings. I think the I is just inverse. So it's, if you want to short, if you're trying to short Bitcoin, that would be what you want to trade into. And then this is obviously if you're longing Bitcoin, that'd be what you're trading into. But yeah, so these are the different markets they have. Here's the actual synthetic assets that make up one side of each of the trading pairs here. And what's really interesting is you've got this synthetic silver ounce, which is pegged to the price of silver. And then you've got the regular crypto synthetic versions of these cryptocurrencies. You got Monero, there's the gold ounce, and then you've got what looks like some forexes, some foreign currencies here. So you've got the what is that? Great Britain pound, Australian dollar. Looks like an index for the SEX there, CEX. Binance coin, the yen, the franc. I think that's the Japanese stock market index there. Perpetual oil futures, inverse oil futures, FTSE, and yeah, like quite a few different assets that are outside of the cryptocurrency space. But what they've done is they have, I believe, a Chainlink oracle that feeds them the price for whatever this synthetic asset is, for the price of gold, oil futures, whatever, and then that's just mirrored to that price. So you can gain exposure with your cryptocurrency to something outside of the cryptocurrency world. To me, that's pretty cool. So yeah, so those are the synthetic assets. If you actually want to trade them, and come over here to the trade tab, and then you see here we can select which market we want to trade into. And you're going to need to have either synthetic US dollar, synthetic Bitcoin, or synthetic Ethereum to perform these trades. So to get your hands on that, you can either go over to Uniswap and just trade your Ethereum or whatever ERC20 you'd like to for some synthetic US dollar or synthetic BTC, synthetic Ethereum. Or if you want to use their loan program, and there's the collateralization ratio. If you want to use their loan program, you can put up some Ethereum as collateral and then be returned either synthetic Ethereum or synthetic US dollar. And for the US dollar, the collateralization is 150%. So for every dollar of Ethereum that you put in, I think you're going to get out, for every dollar of synthetic USD that you receive, it's going to need to be backed by $1.50 worth of Ethereum. And you can pick your own collateralization ratio there. Obviously it's safe to do 200%. So for every dollar of Ethereum you put in, you get out 50 cents of synthetic US dollar. Or, if you want to just do synthetic Ethereum, it's a little bit lower of a collateralization ratio for them. And it doesn't look like they actually give you the option there. I think, what's the minimum? The minimum is like, one Ethereum to create a loan here. Is it the same for, it's the same for, synthetic USD. So it might be easier if you're not looking to lock up a full Ethereum to trade synthetic assets, to just go over to Uniswap and get your hands on the synthetic Ethereum or USD that way. But assuming you have a little bit of SUSD in your account, you can come back here, and let's say you wanted some exposure to the gold market. I think it was XAG. Why isn't this working? Yeah, there it is. And so have to scroll through here. I'm just going to scroll down here. Just forget it. Here it is. Okay. So XAG is silver. But this is gold. So right here, if I thought that gold is going to outperform the US dollar, or I mean technically Ethereum, since I'm using Ethereum to get my hands on this SUSD. I could come in here and I could execute a trade with some of that. This is also a decentralized exchange, similar to Uniswap. It just has a little bit more of a traditional looking exchange UI. But we can see here there's a fee, and that's the network fee for the Ethereum network. So right now the gas prices are crazy. I think yesterday they were like 95 GUI. We're up at 209. I think it was up closer to 400 earlier. But yeah, you're going to pay a ton of that gas fee to do that. It should come down as the volatility lowers, but for now that's a pretty chunky fee. But that's the gas fee on the Ethereum network, because again, you have no KYC. This is open to anyone, and so it's just the main cost is just whatever Ethereum is charging to mine, lock some data, write some data into the current Ethereum block. So yeah, that would be how you it's very simple. Just however much US dollar you'd like to sell, will give you a corresponding amount of synthetic gold, and then at that point it's held in your wallet, and if gold appreciates, you can go ahead and sell that for a little bit of a profit, and you get yourself exposure to the price of gold and some of those other assets that we showed there in the under the synthetic page. So yeah, pretty cool. Very easy. Boom, boom. Pick how much you want to do. If you're okay with the fee, hit confirm trade, and then it will actually pop up here in your MetaMask, and you just go ahead and confirm it. And fairly simple, similar to how we were confirming transactions on the other protocols that we've already showed you. All right, that's it.
Okay, so yep, so that's the synthetics exchange. I have another video about how to mint using their native token, and that allows you to you buy some SNX on the open market. Was that Sierra November X-ray, and that's their kind of token that's backing the protocol, and then you can go and actually stake it on their Minter. It's Minter, MINTR, I believe, and you can stake your SNX, and then you can get synthetic USD, synthetic Ethereum from that, and then you'll also earn a little bit on the staking. So if you're going to use synthetics, that's probably the best way to do it, is to actually purchase some SNX on the open market and then go ahead and stake it, and get your synthetic USD, because then you're actually earning a little bit on what you've staked. And then you do get that, you still get that SUSD that you can go and then trade using on their platform. Or there's other platforms, so you don't have to. I think SUSD is accepted in other platforms outside of just the synthetics.exchange, but that was the example that we showed here tonight. So yeah, so the final video that we've got is just the Hedgic options. This was pretty quick, just because Hedgic is so simple. So I will cue that one up, and here we go. Yeah, David, you are providing a backstop with staking the SNX. So if the peg got lost, I think it doesn't work exactly how Maker backs the DAI, but there's a little bit of nuance in there, but it's kind of similar. For a Black Swan event, the SNX will be used to stabilize the stable coin. From my understanding, I don't have a expert level knowledge on it. That'd be chill, but yeah, that's from what I understand. That's how that works.
Hey everybody, so this is the how-to for Hedgic, which is just on-chain options trading, and they're pretty cool here. Great way to hedge. If you make a big purchase of Ethereum, assuming the price is going to go up, Hedgic offers a great way to kind of counteract some of that risk by taking out an option to make a little bit of profit if you're wrong, and instead of increasing, the price comes down. So just walk you through the platform here. It's very simple. I'm actually quite a fan of it. First things first is always going to be connect the wallet that we're using. We've been using MetaMask, so we're going to continue to do that.
There it is. And first thing, we get a nice big warning. The Hedgic protocol contracts have been audited by PeckShield. Your funds are at risk. You can lose up to 100% of the amount that you will provide to the liquidity pool contracts. So never provide funds that you can afford to lose. And if I want to see this audit, I can click on it there, which is kind of cool. I think that's a big risk with a lot of these smart contracts, as we talked about previously in the presentation. Is an incorrectly coded smart contract can be exploited, or just maliciously coded smart contract with an unknown developer could be coded to just run away with your funds. So you can lose 100% of the amount that you're providing to the liquidity contract. That's technically a risk for all of these protocols, which is why you should not invest more than you're willing to lose. But Hedgic makes that very front and center there. But if you're in the DeFi space, you've kind of accepted some of that risk already, so this isn't going to actually scare me off. Actually, having reviewed this PeckShield audit makes me a little bit more comfortable using this protocol. And then we've got another one. It's in beta. Use it at your own risk. Hacks, security bugs, all of these things can happen because of the experimental nature of the protocol. Yeah, that's pretty much everything in DeFi. And you're not going to be compensated. That's also pretty standard. So if you don't agree with any of this, leave this website and never use the protocol ever again. Okay, guys, I think we get it. I appreciate the warning, though. That's a nice thing. But yeah, honestly, every DeFi protocol should have this warning on there. That's why you want to use the ones like Uniswap, Compound, Maker, Aave, the ones that a lot of people have looked at and trust. And not just some protocol that came out this morning and nobody knows who the dev is and no one knows who the team is. That's a little risky. So anyway, all that to say, we've connected our wallet, and we are now able to start either purchasing some options contracts as the calls, or puts. And there's a little explanation if you're not familiar with it. That kind of tells you how it works, but that's good. But if you're here and wanting to use options, I'm going to assume that you kind of already know what's going on. So you can purchase it with Ethereum or with wrapped Bitcoin. I'm sorry, you can purchase a call or a put for wrapped Bitcoin for Ethereum. So if you think the price of one of these is going to increase or decrease, you correspondingly purchase a put or a call on that. And the way it works is you've got a strike price, which is usually the current price, which for Bitcoin right now is almost $23,380. We're purchasing a put, which means that if the price decreases, we will make a little bit of profit. It's going to cost, what is the price of this put? And this is a one day put. So it looks like the cost would be $605. So I would have to pay that. And then if the price dropped to $22,775, I'd be breaking even. So my profit would be equal to the price that I paid for this put. And if it drops further than that, then at that point I am in the money, and I'm going to make a little bit of profit. And I can close that contract out at any point within the next 24 hours, and receive that profit directly into my MetaMask wallet. Alternatively, if I want to do it over the course of a week, 2 weeks, 3 weeks, 4 weeks, those are the different periods for that. And if I wanted to do a call where I think the price is going to go up, I would be paying almost $1,200 for that, because there's more people who think the price is going to go up, which makes sense, as it just got over setting some all-time highs currently. And at that point it would need to go almost all the way up to $24,508 before that contract is going to be worth more than what I initially had to pay for it. And that's over a period of 7 days. So at any point in that 7 days, the price gets over this, I can sell that contract and be in profit. And if the price, goes on the reverse, the only
thing I'm risking is this $1,200 I put in. And alternatively for that put, I'm only risking, for that 1 day put, I'm only risking about $600. So yeah, that's kind of a brief overview of how to buy an options contract. And traditionally how these are sort of used is, I bought a big chunk of Bitcoin because I think the price is going to go up, but I'm not 100% sure that it's going to go up. And in case it falls, I don't want to just be out all of that. I don't want to lose out on. I don't want to be exposed to the full risk of the price, significantly falling. So I could buy a put that's going to be executable, or that will expire in 28 days from now. I buy that put, and if the price drops down below $21,165, I'd actually be in a little bit of profit, and that would be offsetting some of the depreciation that I'm seeing from that big Bitcoin purchase that I made, if that makes sense. So yeah, it's a way to kind of hedge against your risk, and it's pretty cool. So what does it actually look like to buy one of these? You're going to be paying with Ethereum, and obviously I don't have enough money in there, but boy, that gas fee is crazy. Holy smokes! Yeah, the gas fees are pretty nuts right now. And just FYI, I had a way overpriced gas fee for this. So it's not actually $700 in gas to execute a $2,800 contract. I had mispriced the gas, so just a little disclaimer there. I mean, while the gas fees are pretty crazy, they're not that crazy, at least not yet. So yeah, so that's all of the how-tos that we want to cover tonight. We covered how to install MetaMask, how to use the Uniswap, decentralized exchange, how to provide liquidity on Uniswap, how to put some collateral onto Compound and earn some interest back on that, and then how to also take out a loan through Compound if you wanted to keep your money moving or invest it into a different ERC20 or a different protocol. And then we covered synthetics and trading synthetic assets. And then finally, we wrapped it up there with Hedgic and some of the options that they offer there. So, excuse me. So yeah, that's going to cover all of the how-tos. If we have any questions, let me just take a look at the chat here. Looks like we were able to answer most of them as we were going. But yeah, definitely do all of your own research. Get comfortable with the platform before you kind of go all in on it. It's good to, there's lots of YouTube videos out there. We're trying to provide some more kind of training tutorials that sort of show you exactly what to do with this stuff. But definitely familiarize yourself with it before you get in there, because it's pretty easy to get in over your head with a lot of this stuff. And yeah, like Paul said, work it out on a spreadsheet first to make sure it's the right trade and that you're properly hedging yourself. You're not over under leveraged or exposing yourself to too much risk. It's all want to be smart about it. And there's definitely some carryover if you've done traditional Wall Street investing. There's definitely some transferable skills, but also this is a completely new thing where there is a learning curve, even if you've been on Wall Street your whole life. So yeah, don't risk what you're not willing to lose. Absolutely. So yeah, so it doesn't look like there's a ton more questions. We're about can I trade gas fee futures? There's nothing that comes to mind that I know of, but that would be great. That's a great question. I wish there was. Maybe there is, but if there is, I'm not familiar with it. But maybe you need to hire a developer and come up with your own DeFi protocol for trading on gas futures. That's really funny. But yeah, so I think that's going to do it for the how-to section. If there's something we didn't cover or there's something that we did cover and you'd like to know a little bit more about it, like
like on Compound, how their C token works, or on Synthetics, how the staking mechanism works there, anything like that, definitely let us know in the comments, and we might just make another video about it. But yeah, we're gonna keep producing content like this. We're here for the long haul, and we're trying to build that open economy initiative and push it forward, that open economy that everybody deserves. So yeah, Chill, are you still with us?
Yes, I am.
Okay, so the final thing that we have tonight is talking about the confidential surprise section that I kind of teased last week. And I'm really excited about this. I know Chill is really excited about this. But yeah, what's coming up in September of 2021, Chill?
We are going to organize a confidential DeFi hackathon. So some of the projects and these newer platforms now allow smart contracts and different confidential DeFi projects to be built that are private by default, but also have the option for being audited should the regulators require. So we're in talks with, we're talking to Beam that will participate. Zcash is interested, Dash, also the Monero community. So yeah, I'm super, super excited about this.
Yeah, no, I am too.
Oh, my favorite Zcoin.
Yeah, no, so yeah, we got a lot talking to quite a few of the privacy protocols and some of their developer teams and their communities. They all seem pretty excited about it. And it's interesting too, some of the conversations we've had with like institutional players and like wealth management firms are they want privacy. They don't want everyone to be able to follow every transaction that they're doing if they become involved in this DeFi space. But at the same time, they do need some transparency in terms of regulations. They need kind of like what's called like opt-in transparency, so opt-in audibility, so they can show the regulators, yes, here's what we did, we were above board, but you don't have everybody knowing exactly what you're up to, and so it's kind of private by default with this opt-in audibility. That's kind of where we see the future of DeFi going, and so because of that, we're going to organize this hackathon and kind of invite all of our fun friends from the privacy space to come and join us and see what we can build and see what we can get up to. So that'll be September. We haven't picked a date just yet. We're seeing what everybody's schedules look like. But yeah, September 2021. And it's going to be all virtual. I'm not sure. We don't want to bet that everything will be opened back up by then. So we're going to do it virtually. And yeah, follow us on Twitter. Check out the website, theopie.com. Subscribe here to the YouTube channel. Make sure you're staying up to speed on that. We'll definitely be releasing some more little teasers and fun information regarding that hackathon as it progresses. So yeah, anything else to add, Chill? Are you good?
No, that's all.
All right. Awesome. Thank you, everybody. And thanks for coming out. And we'll definitely be putting some more content out. I think our next stream is on the 28th. Is that Monday?
Yes.
And yeah, we'll be taking a little bit of dive into some of these privacy focused DeFi protocols and projects. And yeah, just come on out, keep learning about it, and we'll keep building that open economy everyone deserves. Thanks, everybody. That'll do it for tonight. Bye-bye.